While everyone's talking about the next big move for Bitcoin and Ethereum, a silent revolution is brewing just beneath the surface. An invisible force is connecting the real world to the blockchain, and its latest update might just reshape the entire crypto ecosystem. What if we told you that the future of finance, i.e., and even your everyday apps depends on this one critical piece of technology? Today, we're diving deep into Chainlink. We'll uncover how its native token, Link, is solving one of the biggest, most fundamental problems in Web3, and we'll look at the on-chain data that shows why the smart money the whales are quietly accumulating it again, right under our noses. Most cryptocurrencies operate in their own digital bubbles. They're great at tracking transactions within their own networks, but they're completely blind to the outside world. Think about it. A smart contract for crop insurance needs to know the weather. A DeFi lending platform needs to know the current price of Ethereum. An AI model needs access to real-time, verified information. Without a secure and reliable way to get this external data onto the blockchain, smart contracts are, well, not so smart. They're just isolated code. This is where Chainlink comes in. It's not just another cryptocurrency. It's the essential bridge between reality and the blockchain, the translator that allows the digital world to interact with the physical one. So, what exactly is Chainlink? In simple terms, it's a decentralized Oracle network. Now, Oracle might sound like something out of a fantasy movie, but in the crypto world, it has a service that finds and verifies real-world information and feeds it into blockchains so smart contracts can use it. But here's the crucial part: a single, centralized Oracle would be a single point of failure. If it gets hacked or provides bad data, the entire system collapses. Chainlink solves this by being decentralized. Instead of one source, it uses a whole network of independent nodes that all have to agree on the data before it is sent to the smart contract. This makes the information incredibly secure and tamper-proof. We're already seeing this in action everywhere. In DeFi, Chainlink's price feeds out of the industry standard, securing billions of dollars in value by providing accurate asset prices for lending, borrowing, and trading. Imagine an insurance smart contract that automatically pays out a farmer if a Chainlink Oracle network confirms that a drought has occurred, with no more paperwork or middlemen. Or picture advanced AI models, which need massive amounts of reliable data, using Chainlink to pull verified information directly from multiple sources to make better decisions. Chainlink isn't just a theory, it's the foundational plumbing that's already making Web3 work. And the ecosystem is heating up. Chainlink recently announced its Link Reserva, a strategic pool of tokens designed to supercharge ecosystem growth and accelerate adoption. This isn't just talk, it's backed by major partnerships, like their collaboration with SBI Group in Asia, which is bringing Chainlink's capabilities to one of the biggest financial markets in the world. But here's what investors are really watching: supply dynamics. As more of the Link token is used for staking where holders lock up their tokens to help secure the network, and earn rewards, and as more is allocated to fuel this growth, the available supply on exchanges is shrinking. Basic economics tells us that when demand increases and the supply decreases, the value of an asset tends to rise. The data backs this up, showing a clear trend of Link tokens moving off exchanges and into private wallets, signaling that long-term holders are betting on its future scarcity. Now let's talk about the next frontier, i.e. real-world assets, or RWAs. This is where Chainlink's role becomes even more critical. Tokenizing real-world assets like real estate, stocks, or bonds and bringing them onto the blockchain is considered the next trillion-dollar opportunity in crypto. But how do you prove that a digital token representing a bar of gold is actually backed by a real bar of gold sitting in a vault? You use Chainlink's proof of reserve. This technology allows a smart contract to automatically and continuously verify the off-chain reserves that back an on-chain asset. It's no more wonder that financial giants like BlackRock and the major global banks are actively exploring these integrations. They need a trusted, decentralized way to connect their traditional financial systems with the new world of blockchain, and Chainlink provides the key. This fundamental utility is exactly why savvy investors are becoming increasingly bullish on Link. On-chain data reveals a clear pattern. Large-scale investors, or whales, have been steadily accumulating Link. They see the writing on the wall. While the market chases short-term trends, these whales are focused on the infrastructure that will underpin the entire Web3 economy. This accumulation, combined with the shrinking supply on exchanges, creates a powerful narrative for a potential supply crunch. When there are fewer coins available to buy, even a small increase in demand can have an outsized impact on the price. Some analysts are already pointing to breakout targets in the $25 to $40 range and beyond. The window for this quiet accumulation phase may not last long, and the fear of missing out on a foundational Web3 asset is starting to build. Looking ahead, Chainlink's vision extends far beyond just data feeds. The roadmap for Chainlink 2.0 is focused on creating a world of hyper-connected blockchains. A key part of this is the cross-chain interoperability protocol, or CCIP. This technology aims to be the universal messaging standard for blockchain, allowing different networks to seamlessly communicate and exchange value with each other. Think of it as the internet's TCP atau IP, but for crypto. This, combined with deeper integration and the on-chain automation, positions Chainlink to become the invisible backbone for the convergence of blockchain and the artificial intelligence. They're building the tools for enterprise-grade solutions that will automate entire industries, from global trade finance to supply chain management. So, let's bring it all together. Chainlink isn't just another crypto. It's the essential, invisible layer connecting every blockchain to the vast ocean of real-world data and to each other. It's the secure bridge that makes smart contracts truly smart, enables the tokenization of real-world assets, and it will power the next generation of AI-driven applications. It's the quiet workhorse of Web3, and its importance is only growing. If you're watching this video and understanding this now, before the mainstream media fully catches on, you're still early. The foundation is being laid right now. Thank you so much for joining me on this deep dive into one of crypto's most important projects. If you believe that projects with real, fundamental utility are the future, and not just the temporary hype coins, then show your support. Please like this video, share it with someone who needs to see it, and subscribe to the channel for more content that cuts through the noise. See you in the next one.